Monday's the 7th. Global markets declining a little bit, which they did. But I did say, I wrote this on the 7th. As I said, I would expect a bounce by Tuesday as the VIX is way overbought and the Mag 7 stocks, SPY, etc. are oversold. I'll look to put prices on VIX for next week, possible IWM call trade as well. Let's just see what happens. And that I announced that in the pre-market. And then sure enough, that morning, I got some IWM calls. So I'm playing the bounce. I got some IWM and I got some VIX puts to see if we would get that move up in the SPY and the VIX heading down to retest 30 because it was way up. So I bought some VIX too. Then Tuesday came and I said, the market will rebound this morning, as if I knew what was going to happen, which I don't. May hit some resistance, or another view is that investors and traders don't trust things right now, so the profit taking may happen quickly for those who went long yesterday. I kept some of my IWM. I'm going to manage it at the open. So what I did was I started taking my profits off. I didn't trust it, so I took my profits early on IWM and some of the VIX, which was nice. I also added some more shorts because we were getting to the point where China had said no. So if China says no, then we're heading down further. If China makes a deal, we go like this. But China really didn't make, we didn't really know. So I took the easiest, cheapest way to go, which was NVIDIA and Apple. These were short. Took FXI as my hedge. Because if China makes a deal, what happens to the Chinese large cap stocks if China makes a deal? It goes up, right? So that was a great hedge for the China situation. But because I had NVIDIA and Apple, and I also had some SPY in Legacy, I added the SQQQ puts. And I wrote here, you could hedge your shorts with an SQQQ put for Friday. They're overpriced, but I'm picking up some 42 puts for Friday just to have short-term, right here, short-term hedge. To protect my longs in what will be a very volatile market. Now, what ended up happening was China didn't make a deal. So FXI was net positive, but China's not playing ball. There's no reason to hold that any longer. So I closed the FXI hedge. And then the Trump announcement happened. And this went whoop like this. And my SQQQ went 3x, 4x. And so just to give you some round numbers, if you added up my NVIDIA position and my Apple position, it added up to roughly $1,400 is what I had at risk. The SQQQQs, I had 4 of them at 90 cents, and I got out of 3 of them, but then the other one I closed some more. The average was, I think, $3.80 to $4, whatever it was. Anyway, it was like close to $300 each. So I made, and the FXI, I was able to close for a little bit of a profit. So I made somewhere around, let's just round number it, okay? $1,200 I made on the hedge. So you can see if I closed out NVIDIA and Apple for like a 50% loss, along with the $1,200 in profit I already made, the whole transaction, I'm net positive. I made money, made good money. So what I wanted to do is I wanted to wait and see if we got a little bit of a pullback so I could get a better exit on my Apple and Nvidia, which I did. And we talked about it in the dual session. So I closed out FXI for a little profit. I closed out SQQQ a little early, I will admit. But the good idea, the good thing that happened is that I had a plan. The hedge paid off big time. And then I just dumped these for like a 50, 60% loss, which is fine because the 40% that I was able to retain plus the $1,200 was more than I spent on all of it. So the net positive. So made money on the way up, made money on the way down, made money on the way up, and made money on the way down, and made money on the hedge too. I made money in every single direction you could think of except sideways. So my point in this is you can just copy my trades. But in a volatile market like this, I would suggest you paper trade them and read the alerts and look at the charts for every alert that I put out and see if it makes sense to you. Ask questions in the room. Start to understand why we do what we do. It will make sense. I know it seems a bit daunting, but 5 years later and thousands and thousands and thousands of current active recurring members, you can be one of them too. As far as allocation in a volatile market, the question is, in a volatile market, should my main position respect my max allo, including the hedge? That's a personal, so that's just being, that's just being a little too frugal and not understanding the purpose of the hedge. So to take shorts in the volatile market and not have a hedge because the hedge would have put you over 90 cents of your allo doesn't make any sense. So you should have just backed off of your allocation so that you'd have the hedge. Frankie, it'd be like saying, all I have is $500. My car payment's $500. I don't have enough money for car insurance. So I'm just going to drive the nice car that I have without insurance. Well, guess what? Get a different car or restructure your payments or put more money down and get your car down to $300 payments so you can afford the car insurance. You can't drive without insurance. So there's a few ways of looking at it. And this is a personal, I guess, trading plan. If you said, my max allocation per trade is $300, let's just say, okay? And I could put that on, on multiple trades, okay? That's my burn level per trade. And at this point now, I want to put a hedge. So I want to spend like maybe, $150 on a hedge. So you do that. This is your allo per trade. Now maybe you have a max allo of say $1,000. I really don't want to go over 1,000. And let's say you added to this trade, right? So now you're at 1,100. You're really pushing your maximum allo with all the trades that you have on. But you need to put on a hedge. Do you really want to trim this down so you don't go over your allo by too much in order to include the hedge? Well, that's a personal decision. Either sell some of the position to down into $900 and then add your hedge, or just add the hedge. Yeah, so SQQQ is the inverse Hawk 05. So if you looked at here, well, let's do QQQ. And then copy window, and then I'll paste window. and then put in SQQQ, and you'll see that it is the, oops, sorry. Apologize to the group, will you? There you go. You can see see how it's the inverse. See, it went whoop whoop, and this went whoop whoop. It's a leveraged ETF, and if you look at the price, it's $30 versus $460, which means these puts and calls are going to be super cheap, especially if they're out of the money, which makes it a fantastic hedge. The same thing that we've done with IWM. So if you look at IWM and then you look at something like TZA, TZA is the inverse of IWM, but look at the price. If you're long in the Russell, if you're long the stocks in the Russell or the Russell and you want to short, you're not going to short with the Russell, you'd short with TZA. Now, sometimes you can just go ahead and buy the puts. But if the market is moving up like this, which means TZA is moving down, the puts are going to be too expensive. Volatility. So what you can do is you do the opposite. You can, if you wanted to, you could go to TNA, right? We could go to TNA and then just do the reverse, right? And so, because this tracks, this is super cheap, but it's a triple leveraged ETF that mimics the IWM, but it's super cheap. So let's just say you were long this, you could buy puts on TNA as your hedge. So either the TNA puts or maybe the TZA calls, whichever one of them is cheaper. You price them out. Yeah, so if you're working with a small account, even more reason why you should be hedging some of your positions with a very inexpensive hedge. If you took NVIDIA and Apple, what you should have done is probably narrow the spreads or just taken one of the two trades and then had a small hedge on it just to protect. If you've been trading with me for the last month or two, you shouldn't have a super small account because we've won almost every single trade, which is ridiculous to say. I should take it back because it's just a stupid thing to say. But March and April, 92%. So if you're trading with me, guys, out of the last 37 trades we've done in March and April, 92%. I mean, I don't know what, teach you how to fish, give you the alerts, a library of 3,000 hours, 10 hours on the microphone a week, all for $79 a month. I mean, what else do you want me to do? I know you want me to trade your account someday. So that's, today's action. Crazy, huge swing. And so obviously with this kind of a move, you're going to take your shorts off, which we did. Cash in on the hedge, which we did, which now we're flat. But now you probably see, and now also just to note here, we are not overbought. We are on the hourly charts in the short terms, but the daily chart is not overbought. And you're not even above the 20-period moving average. So I figured, why not add a little exposure? And so I just added a small SPY vertical, as you can see, for next week.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.